I asked 13 different YouTubers if they wanted to be part of a collab video. Unfortunately, most of them either ignored me or never sent me their vocals. But 2 of them did. So today I'm joined by Alex from AlexRozeGaming and Tyler from IAmTFish. The premise was simple. If you had $100,000 and you could invest it however you wanted, but you could only choose a maximum of 10 assets, what would you buy and why? I figured it'd be fun to hear different investing ideas from varying degrees of knowledge and different walks of life. Now, Tyler gave me an idea that pretty much broke the video on the first day, but he didn't actually go through with that, so I'm definitely going to take some inspiration from that, and I think it fits me really well considering my career, so stick around for that. Future Josh here, he actually did briefly mention it, but I've already recorded the video. But without further ado, welcome Alex.
Hello, Alex Rose here of AlexRozeGaming. Thank you so much, Josh, for having me back on the channel. I think this is a fantastic video idea, and I've been really racking my brains because my first instinct was just to be like, all right, I'll put it all into XRP, invest everything into one crypto, but that would be like a 19-second video, and it would be kind of lame. So instead, I figured I would avoid crypto and I would avoid leverage, because if you have 100K and you invest it into, say, a property at 10%, you could get $1 million property. And leverage just unlocks too many options, and literal options for trading. So instead, I'm going to be limiting it to just stocks and ETFs. Okay, so what I was thinking is I'd put 40% or $40,000 divvied up into SWANs. Acronym being SWANS. Sleep Well at Night stocks. Stocks that I could put money in, not check it for 2, 10, 20 years, know it's going to be safe, nothing's going to happen, rain or shine, war or peace, it's going to be fine. These are stocks that have stood the test of time, and even with advancements in technology, aren't going to be going anywhere anytime soon. Now, this feels like a great place to say this is not financial advice. I am not a financial advisor or fiduciary. Do your own due diligence. This is just what I personally would do. And I have talked about some of these stocks before in different videos, which I will shamelessly plug here. I think I have a video titled Swans or Swan Stocks. But I would take that 40% and I would put $15,000 into waste management. Now, I've got a video going over Republic Service versus waste management, but I'm partial to waste management myself. And as a business goes, no matter what's happening in the economy, you still need to get rid of trash, because if you let that stuff pile up, you'll get rats, you'll get bacteria, viruses, diseases, people will get sick and die, and then you have a much bigger problem than just some trash on the streets. Plus, they pay some pretty great dividends. Now, the next stock I would put $15,000 into, which is one of the swans, would be Union Pacific. The railroad has built this country, and it continues to keep it operating. My day job, if you can qualify it as a day job, is an over-the-road flatbed truck driver. Now, I see a lot of transportation, logistics, and shipping going on, but by truck, it is not nearly as much as what train does. You can get one train with hundreds of carts moving literal hundreds of metric tons of raw materials, whether it's lumber, steel, coal, you name it, they ship it. A lot of the times, the ports will unload the ships onto the trains will go to shipping centers, and then from there they load it onto semi-trucks going to job sites or to stores for retail sales. They are one of the oldest companies in America, they pay beautiful dividends, and they are incredibly safe because trains literally are not going anywhere anytime soon. We've had the advancement and creation of flight and space travel in that time, and trains have still stayed here, standing the test of time. And the final $10,000 of that 40% that I spoke of earlier, I would invest into ExxonMobil. Now, I know there are other oil companies like Chevron, which you could, but I'm also partial to ExxonMobil. It has a long, rich history going back to Standard Oil and the Rockefellers. Love him or hate him, J.D. Rockefeller was one of the most successful businessmen in American history, and his company Standard Oil became so big that it caused the modern-day monopoly laws. He was ultra successful. His company was ultra successful. And oil itself is not going anywhere anytime soon. Even with everyone pushing to move to electric, which the grid literally cannot handle, we still need oil for cruise ships, cargo ships, airplanes, rocket ships, Our entire medical system is based off of petroleum medicines, so different byproducts of plastics and oils. Not to mention plastic itself is an oil byproduct. So oil is a very safe bet for the long run. Now the next 10% might be a little boring, but sometimes boring is the name of the game. The tortoise beats the hare, safe and steady over flashy and explodes in your face. So I would put the next 10% into either the S&P 500, the top 500 companies in America, or the Vanguard Total Stock Market ETF, VTI. I feel like either of these are a solid, safe bet for long-term growth. The next 40%, I would be investing into income. Stocks that I know are going to either produce income now or are guaranteed to be very strong producers of income in the future. I've narrowed it down to 4 of my favorites, and I'm going to put 10,000 in each of them to make things nice and even. The first of these 4 would be none other than the monthly dividend company. We all know what that means. Realty Income. They are one of my favorites and one of the first dividend-paying stocks that I ever invested in. I would put 10,000 in there in a heartbeat. Collect the monthly dividends, and they grow their dividends year over year. So I know that I'm going to be getting a good income from that now and more later on. That can easily help me to pay off any kind of bills that come up. Now, I won't be able to live off of that, but having your cell phone bill covered, maybe electricity bill, something along those lines, every single month frees up more investment capital or more money that you could save for other things. The next company is Coca-Cola. And the Oracle of Omaha himself, Warren Buffett, probably the second greatest investor in all time, second only to Nancy Pelosi, who mystically has the power of 1,000 hedge funds behind her, is able to produce such phenomenal growth, dividends, brand recognition, loyalty. It is a great investment. Now, the only downside, if you could count it as a downside, is that they only pay their dividends quarterly. But with the amount of growth they have and the solid stability and strength, I could easily overlook the fact that they don't pay monthly, especially since most stocks don't pay monthly. That's only a newer thing in recent investing history. But still, that's the only knock I could give on them. The next investment that I would put $10,000 into is one of my absolute favorites, QYLD. It's a covered call ETF. Now, it took me a while to get the hang of doing covered calls myself, making money off of them. And I was able to get around about $400 a week in covered calls. But the problem with that is I had to be on my phone 24/7, watching the markets, keeping an eye on the news for macro indicators, and I just can't do that with my job. But you know what I can do? I can put money into QYLD, and then they can do all that hard work for me. They do all the covered calls, they handle all the mental stress, and then I just collect the dividends. Beautiful, simple, easy income. I love it. And the last individual stock that I would put $10,000 into for income, which it was difficult to choose, but I would have to go with one of my favorites, Main Street Capital. You put your money in there, you get the monthly dividends, but on top of that, they give you a special dividend every quarter. So 4 times a year, you get an additional dividend. That's more dividends per dividend. A solid company to invest in. Now, are they the best in their sector? I don't really think so. But sometimes you don't need to aim for absolute best. You could aim for second, third best, and still get phenomenal returns, great results, strong dividends, and a safe and reliable company to put your money into. The last 10%, I would split it. 5% into physical gold and 5% into physical silver. I know I said I was going to focus on stocks and ETFs, but you always need that little extra something on the side. What if the internet goes down for a couple days, or there's a system outage, a blackout, who knows, a solar flare, who cares? If the systems are taken down for a little bit, you need access to money to buy food, water, whatever it may be, having physical gold and silver that you can take to a pawn shop makes it so much easier. Also, about 4 years ago, I bought 10 ounces of silver and quite literally stuck it under my mattress and forgot about it. And then only last year, at the end of 2025, I looked at the price of silver and realized it had doubled in value. I had doubled my cash while having absolutely zero risk. Like, even if my house had burnt down, the silver would have melted, but still would have been there in like a giant, ugly chunk. So the value would not have decreased. One of the absolute safest things you could park your money into. It's better than a high yield savings account. Most high yield savings accounts only give you like 0.5%. And if, like I had stated earlier, there's some kind of natural disaster or power outage on the grid, you can't access your money. With this, you have easy access to it. It's one of the oldest, strongest forms of currency, being gold, and also silver. And there is a limited amount of it on the planet, and most of our technology needs it, which means what little there is constantly in demand for real-world use. But that's how I would invest $100,000 if it was given to me lump sum right now. I'm super excited to see what the other guys would invest into, and if they went different routes than what I was thinking. And let me know what you guys would do in the comments below. What would you invest the $100,000 into? Maybe you would put it into education or covering your debts, knocking out your student loans. Paying off debt is an investment of sorts. I'd love to compare and contrast. Don't forget to like, comment, and subscribe. Get Josh to 1,000 subscribers, 10,000, 100,000. Get Josh a nice plaque. He works hard, he deserves it. And thank you, Josh. I absolutely loved this video. It was a great brain teaser. It was so much fun looking through all my different stocks that I like. I was like, oh, should I do this one? No, I should do this one. I only have so much to work with here, and I don't want to do... I'd put $20 into this, $10 into that, $5 into this. I wanted to focus on bigger chunks, keep it more concise. I had a blast. Thank you so much. It was great being on the channel. Everyone, don't forget to like, comment, and subscribe, and I'll catch you on the flip side.
Shout out Alex for that call to action, and thank you for the kind words. Y'all should go check him out. I've played Xbox with him. He's awesome. I'll link his channel in the description and or the comment section. Now we move on to Tyler, who I just realized I don't know anything about, but please welcome IAmTFish.
What's up, everybody? My name is T-Fish. I want to give a huge shout out to Josh, who has invited me on his channel for this particular video, discussing what we would do with about 100 grand if we had 100 grand free and clear for investments, with the caveat that we have a max of 10 things we are allowed to invest in. So I have a couple things here broken out. We're going to get into it. Again, thank you, Josh, for inviting me on the channel. I apologize if I just over-explained stuff that you already explained in the intro, but let's get right to it. So we're going to start with, we're going to take about 25 grand and we're going to put it into a good like S&P 500 index fund. We're not going to get too specific about the specific ticker symbols themselves, but something like a VOO is a good, I guess, a good ticker symbol. Again, or let me state this, I'm not a financial advisor, obviously. But something like 25%, so 25 grand into like an S&P 500 index fund, something that runs, you know, has good annualized returns. Historically speaking, it's good diversification right off the bat, low maintenance stuff, a lot of like American-based top companies, and then you're kind of just riding the backbone of capitalism on this one. Next thing we're gonna do, we're gonna throw about 10 grand into like a U.S. stock market total ETF. One that comes to mind is like a VTI, but other things can be similar. SCHB, things like that. Now we're covered like across the entirety of the US market. Next, we're going to kind of dip into about 10 grand into some international developed ETFs. So a good one is like VXUS. So if the US does, for whatever reason, underperform long term, you kind of still have some basis of protection. We're going to go into like an emerging markets ETF with about 7 grand. This gives us like a controlled amount of risk exposure. So you could look at like VWO or EEM as ticker symbol examples. Again, all examples. So some controlled risk exposure, which is super important. And then you could do the next one, probably about 10 grand into a real estate investment trust, a REIT ETF. This gives you exposure to different commercial real estates, warehouses, apartments, data centers, without physically having to be a real estate owner yourself. This shows you some good income. You can keep decent track with inflation, and then there's a real physical asset there that you get to see and have exposure to, which is super important. The next one, I'd probably take about 8 grand and do one of two things. So you could do a down payment fund, so physical real estate. So on 8 grand at 10%, that's $80,000 worth of real estate, which depending on the part of the country you're in is realistic. In other places it's not. But you pretty much have 8 grand for that. Now this could sit into like an HYSA in the meantime, or a money market fund. This is keeping that dry powder, in your back pocket for if something does happen in the real estate market. The next thing we're going to do is throw about 7 grand at gold. Now this could be physical or gold ETFs. You have things like GLD or IAU as examples. This is crisis protection, big thing. And gold usually doesn't explode. It kind of protects a little bit more of your capital, which is super important, having that physical asset. I would probably honestly buy physical gold. It's just also really fucking cool to look at, and that's a little bit of the human side of it, I guess. Next, I'm not super big on high jumping into crypto. That's not really my thing. Certain people have different opinions, but we're going to throw like a respectable 8 grand at Bitcoin. On the downside, if this fails, we lost 8 grand or 8% of our total $100,000 investment. If it does what it's been doing, the upside is fucking huge. It's massive, actually. There's a lot of possibilities for this to either ruin the entirety of the portfolio or the entirety of this 8% of the portfolio, or become a much larger portion of it just because of Bitcoin being Bitcoin. Next, we're going to throw about $7,500 at a specific stock. So you could do whatever you want, just like a high quality blue chip stock that's something that you believe in, or as a company. So like a good example would be like Microsoft or Apple. I'm going to throw money at Coke. I've been invested in Coca-Cola. I've been invested in Coca-Cola personally for years, not in high amounts, but that's like one of my go-to. It's blue chip. It's got good dividends. It's reliable. Warren Buffett owns a shit ton of it, but really kind of like whatever you believe in. And the last thing that I'm going to do with this money, the remainder of the money, and we can invest in whatever, we're going to throw some money into ourselves. This could be a ton of different things. I could get my information better for how to manage these things. I could take some stock courses, some investment courses to be able to keep up with some of the stuff a little bit better. Or maybe it's capital for a business I want to launch, or different AI tools I want to invest in. Whatever the case, it would allow me to continue to benefit from this windfall of 100 grand that I'm able to invest in, and better manage the portfolio moving forward. So maybe this 100 grand turns into 200, 250, 300, 500, whatever.
Thanks again to T-Fish. Not many people invest outside the US, so I think it's good that you're really diversifying and covering all your bases. But with that, I guess we can get into my portfolio. Alex kind of foreshadowed it earlier, but the very first thing that I would do is take $10,000 and use that as a down payment on a property. Since it would be my primary residence, I can get an FHA loan and I only have to put 3.5% down, which on a $250,000 house is less than 10 grand. But for the sake of the video and paying the tiniest amount less in taxes, I'm going to put 10 grand down, and if the property appreciates at 4% a year, I'm getting all of my money back in equity every single year. It definitely feels like cheating, but I've come to find out recently, if you want to make some money, get into real estate. And with the rest of my money, I'm going to do something that's a little bit more unorthodox, but I think is definitely worth it. For the next 75%, we're going to split it up evenly into 3 different stocks. 25% into ASML, 25% into GE Aerospace, and 25% into MasterCard. And it's not because I've made a video on all 3 of these. I think all 3 of these companies are incredibly high quality compounding machines, and I think they're going to continue to do well in the future. ASML might be a little bit overpriced for now, but with this AI and this semiconductor boom, I'm willing to pay a little bit of a premium. I think there's still a very long runway, and I think this company is going to continue to do amazing in the future. And as far as the other 2, GE Aerospace has rebounded a little bit, but it's still down around 11% from its highs. I will say, I don't think this whole Iran situation is done with yet, and I think in the future, GE will go down even further. But regardless, I don't think it was ever overvalued, and I think now is a pretty good time to get in. And in the case of MasterCard, it's actually at multi-year low valuations. Now is an amazing time to buy into MasterCard. My whole position is actually down a little bit, so I'll probably be picking up some more shares soon. But I think all of these companies are going to do great in 2026. I think they're going to do phenomenal after that for years to come. And they're all very dominant in what they do. MasterCard, in its duopoly, has the most competition out of all of these companies. And for that reason, I really don't think it's that risky for me to put this much of my portfolio in these positions. Now for the next 5%, I'm going to put it into Bitcoin. I know everyone's been talking about this recently. I've made a video on it, but just like Tyler was saying, the potential upside on this is huge. And at the very least, it diversifies my portfolio a little bit more and adds another asset class. And for the last 10% of my portfolio, you guys might think I'm crazy, but I'm actually going to hold it all in cash. Of course, this is going to go in a high yield savings account so I can maximize my returns in the short term, but there are a few key reasons why I'm doing this. Number one, the commitment of traders report. This shows the buying and selling of big banks and institutions, and if we look at the US dollar, they have been adding to their positions since December. And if you look towards the bottom of the picture, we can see the most recent report, which was yesterday. Not only did we have a pretty nice jump up as far as net change, but if you look towards their long and short contracts, they didn't just buy longs, but they actively sold shorts. This is a very good sign for me. If we take a look at the asset scorecard, we can see all the core fundamentals, economic growth, inflation, and the job market. And you can see most of these are leaning towards bullish. The CPI report just came in as forecast. That's at the very least not a bearish sign. And all of this has led to the Dixie rising since January. And on top of all of that, I really don't think this Iran situation is over yet. I watched a really good video by Max Fisher last night, and he explained that the oil tankers move at the speed of a bike, so like 10-15 miles an hour. What this means is we haven't even seen the effects of the Strait of Hormuz closing yet, but it's coming. And I don't think the whole world is going to explode, but at the very least, it's going to put a damper on the stock market. And for example, GE, if we have to put restrictions on travel, we can't travel as much, GE is going to drop. The dollar has at least slightly increased in value over the short term, and holding this cash position allows me to be versatile and I can grab any stock that I need to or want to whenever the price drops. Now, before any of my long-term viewers flame me for doing this because I'm always talking about hyperinflation, this wouldn't be a long-term thing. I really only would do this either until I get a good price that I like or 2026 ends, whichever comes first. I don't plan on holding cash for the long term. And with that, we have our 3 portfolios. Let me know which one you think is the best. Again, thank you so much to Alex and Tyler for being a part of this. I'll link their channels in the description and the comments. But I hope you got something out of this video. If you did, consider leaving a comment, consider subscribing. I would really appreciate it. Good luck on your investing journey.